And we are live. No, not really. I always record these shows, well, not always, but most of the time, around 6, 7 o'clock Eastern Standard Times. Sometimes early the morning that I release them, if I can do them the evening. And what do I have here? Okay, I want to review some of the economic data that came out recently, and I was really looking for here. Unemployment rate was really one I was looking for. I'll zoom out and you'll see it there later on the monthly or even on the daily. That unemployment rate, when it gets really, really low, and when it starts turning up, when it really starts turning up, combining that with a monthly defined breakdown chart, and combining that with total non-farm payrolls that are starting to roll over, combining that with very low or inverting yields, combining that with manufacturing index, and the plethora of economic data added to the chart, the price action, and getting some substantial evidence of the bottom of business cycle, imminent recession, and what soon follows is a correction or a downturn in the stock markets, the U.S. stock markets. So we had 1, 2 up from 380. What was the low? 370. And after that, I was starting to see that trend changing, but I really wanted a third metric up to really start getting that angle upwards, but that's not what we had. We actually had a downtick in unemployment back to 380. So this is still bottoming, not as low as we were at the bottom, but we're hitting some resistance right here on the unemployment rate. Mixed signals. Total non-farm payrolls was plus 20,000, and you see you barely see it. It's flat, a little flattish, but we used to have pretty good increments. We pretty much had linear increase over and over and over. So that's just one metric. Let's see the following one. If we get negative, sometimes these numbers are revised negative. So I'm going to keep an eye on that right now. So still in an uptrend. I believe the top pattern and the monthly candle chart is very close. Maybe get a little bit bigger, but very close to I think being the top pattern. If it morphs into something else, I'm going to have to take a look at it. It's going to morph into a bigger pattern if we overcome those previous highs. But I still won't play a long game unless, just because of this, just of the extremes that I'm seeing in the unemployment rate. Maybe it's going to last 3, 4, 5 months, keep going down. But that's what I'm willing to bank on. I'm not penalized by any means because I'm staying cash, waiting for the best opportunity to short. I actually think that is going to help me to be able to play that better reward environment once we start turning back downwards from this top pattern. I think it's a better play. Less risk for bigger reward going down than entering anytime here, and for potentially small reward. Because even imagine here we start breaking out on this is daily, let's say. Here's my top pattern. Let's say I have a greedy target, paste arrow. So let's say this is my measured move on the daily chart. And here is my target right here. This is possible to reach even that target this late in the business cycle. Well, it could happen. It could happen fast. But it's a question of time. This could turn at any moment. The economic data can make that any bad news could be worse news to bring everything down. So the hammer could be hit harder downwards, I believe, than up. Because remember, you want the fuel for a rally to go up and for hammers, for bad news not to be taken into account, or for the hammer to hit the price action up and up at the beginning of a cycle. Let me bring back, let's say in 2000. Oh wait, let's just reset the chart here. Let's bring it back all the way to what I'm going to do, I'm going to add my good old US recessions. Let that load up. Okay, here's my 2015-16 one. And the more I look at it, I know not many people take into account that recession or micro recession. But sometimes when I look at the data, I have a feeling that this last leg is almost artificial, that we should have been falling off here. Especially when I compared it to my last podcast, I called the Industrial Production Index. Or the deficit. We had the. I'm gonna add it. It's worth it to. Let's add it. Deficit surplus. Check it out. You'll be amazed. Where's it? It's loading. Please wait while loading. Okay, I'm gonna maximize the chart here. Okay, so while that's loading. Here you see 2008 down. This again, risk of repeating myself. Combining that with bottom formations, this is the steam you have to go up. Unemployment high rates high. This is like almost all-time high, above 8, 9. That's the fuel you have to push that up. Same thing here. This is the manufacturing index, the survey. You want it to be below 50 is a contraction, above 50 is an expansion. You want it here, exploding up. That's your clues that these are the clues. That's a fuel that after that you maintain. You go from, and after that, same thing here with the inverted yields. You want it to be far away from the zero. And you want it to start, this one's a little lagging. You want it to start declining slowly and slowly, combining all that together. So that's why, again, I'm still going to wait. It's not a conspiracy theories about the Fed, about whoever's doing what. It's about a business cycle. It's about a business cycle on its final stretch. I don't know how many miles it has left, how many more months, 5, 6, 7, 8 months. And that eventually is going to hinder whatever's happening here. I see that being reflected up there. Why is not loading? Go. Too many? Okay, I do not know why it's not loading. So that one, I think I call that a push. That means when there's a tie, you just push. So it's going to go down. Let's see if it keeps going down. And just keep an eye on it. Maybe the next time that it's going to test that resistance, it's going to bust up, and then we'll be angling upwards. But remember here, it was down, 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 down. And now we're not making new lows. We're just sideways moving. And that actually is flattening, just like we have stage analysis, stage 4, stage 1, and then stage 2 on the way back up. Here's another one where I totally forgot about it. Properties, settings. Can I do that? Trading view is awesome. Okay. Oh, where'd you put it? Okay, it disappeared. All right, I'll do it one more try. I just want to put it on the 50 line because 50 is the where's the 50 line? 50 is the expansion line. Okay, close enough. I'm going to get rid of the payrolls. I'm going to get rid of the unemployment rate. We know where we're at with that. There you go. And look at that. So last month we had a reading going back up. And now we're etching back downwards. I totally missed under the radar. And this is what you want to look at. When you go under, let's see what happened the last time I went under. Well, the last time I went under here, we were in that micro recession. Let's move it. Ooh. Let me zoom. No, the other way. So look at that top formation we had right here. Trend line. Big top pattern here. Another one here. Breakdown from the head and shoulder stop on the daily. Down, hit that resistance, that support, sorry. And then retest that support and resistance, and then go down and down. But look at that. See how it kept going down and down here? And when we crossed into that negative territory, hey, guess what? Recession. So it went down below, retest, then make it, recession, try to go back above. No, retest, recession, and then went deep inside, and down it went. So this is a pretty healthy indicator of economic data of the U.S. Economy. I really added that with the weight of evidence with a market top. You don't want to see it going negative territory right here. How it looked like in 2001, same thing. Recession of 2001, even plunge before. Negative territory, stay for a long time, contraction. That's not what you want to see. In an uptrend, you want to see here, above 50. Here, above 50, like the power zone. Oh, testing it, but staying above. Power zone. No, not power zone anymore. Oh, so even that small dip, it's not super duper. 50, up here. So we're getting closer and closer, big top. And I'm keeping an eye on that one with all the other economic data that I'm looking at. So check this out. Go check the industrial production index podcast. You'll see that the industrial production index right here, usually mostly correlation is pretty nice. It follows pretty much the stock market. But somewhere here, sorry, I keep dyslexing everything. The deficit, we started getting bigger and bigger deficit and getting instead of getting closer to surplus while we're diverging with the stock market. And when I saw that happen just around this area, I'm trying to gather clues why this run is so sustained, even if we're having. I guess sometimes the market, they're discounting, or they decided not to discount some types of information. Maybe they don't matter anymore. There's other metrics. So that's pretty much the beauty of Stan Weinstein stage analysis. All this deep diving that I'm doing to try to figure things out, you didn't have to do it. You get pretty good results with just looking at the chart action. He did look at macro technicals, Stan Weinstein. He looked at the New York advanced decline. He looked at the indices. He had a whole bunch of small techniques, and I'm just trying to build on that with my observations, just try to make it better, and really try to get the optimal, highest of probabilities, scale in opportunity at the beginning when I know we've turned the corner, and the chances of the boat changing back direction, continuing an uptrend have totally disappeared, and I could scale in on the initial breaks, on the pullbacks, hitting a monthly defined support and resistance, adding on, scaling in, and after that, when the economic data, when the chart starts winding down, and you're starting to get clues that there's a recovery in progress, and after that, start scaling out, exiting when there's trend line violations, and final exits when the 30-week or the 12-month moving average is done, guys. Woo! All right, so that's pretty much it. So Dow Jones Industrial Average, economic data, keep an eye on it. I just don't see the bull picture for now. I'm gonna look and time my entry for shorting. All right, guys. Thanks for watching.